Here we go now. Hey, welcome to the Closing Beat, everybody. Really close. Happy Wednesday. How you doing out there? Hope all is good. We've got some storms coming in the area here, so apologies for anything if we... Oh, yep, there's the thunder just as I said it. Fascinating. It is summertime, the ending of summertime here in Florida. Still hot as all get out, but that's what we're dealing with here. So we are financial advisors at Jazz Wealth, and yeah, that was actually a live shot. We were just testing out some different cameras and stuff, so we said, well, let's put it on there, see what happens. We are focused on education, right? That's our big thing. And do me a favor, if I help you out in some way, I'm gonna get right to it today, but if I help you out in some way, or you like what you see here on the rest of the channel as well, little subscribe button. You know what I mean? You hit the subscribe button. You could turn the alerts off if you want, but I'm just going to keep asking, right? We're trying to grow the channel and really stand out as somebody there. Put all this good effort to use and let other people see it as well. So I thank you for that, all of you that are subscribed and can decide to do that for us. Our Wine and Wealth last week, you want to check it out. Eric did he did 5 sort of mistakes that people make in Nest Egg. That's our financial planning software that we work with clients to actually set up and get going. But you know, common mistakes. We give it to you as if you are an advisor as well, so you get to see the nitty gritty in the back end there. Notes from Jazz every single week. Actually, we do like that. Notes from Jazz is an email that we put together every single week, and hope you'll check that out if you're one of our clients there. And we are working on being able to watch all your dough, right? Advise on anything financial rather than just say it's all retirement and things like that. Anyways, we know where the stock market's at here today. It's very likely going to be here tomorrow, the same sort of thing. Yesterday, small down day. Today, small up day that erases all of the losses from yesterday. But you know, like I said in the title, it's just not much, not going on out there. Thursday, which is tomorrow, really starts the Jackson Hole meeting, which, by the way, it's just an event that the Kansas City Fed puts on. So it's not like, you know, I don't know why it gets more attention than the other events, but maybe it's because of the backdrop and how pretty it is out there. But there'll be a lot of people there, a lot of people with a lot of money going to be talking, but everybody's interested in Friday with Jerome Powell talking. We're looking for language that says consistency, not more aggressiveness, right? That's what the market's kind of banking on. If you take a look at the charts, here's the S&P. We had this most recent pullback, the rejection of the 200-day is basically what you could label that. And the markets have settled in and said, you know what? We think we're going to see consistency in his tone and in his language, but we're not going to see more aggressiveness, right? It's just not going to happen. So anything other than that's going to be shocking to the market. Your growth stocks, your interest rate sensitive stocks, which really don't matter anyways because rates are still moving higher there. Remember that the Fed's last comments, in fact, were inflation is nowhere near where we want it, right? So while we're doing what we're doing and it seems to be working, we are still nowhere near done. So, you know, it's okay if they continue with that comment there. I don't think that would hurt the stock market too bad there. Anyways, let's take a look over here in the S&P. You know where we stand. Kind of a tug of war day, slight up day, replacing, you know, slight down day from yesterday. If you look around the S&P, kind of a, I don't know, a news-driven type day. I don't know. Anything that was news-driven pulled along its competitors or pulled down its competitors in sympathy. For example, Norwegian Cruise Lines, right? It's a good day for the cruise lines actually as a whole. Royal Caribbean, Norwegian Cruise Lines got an upgrade for the day. Carnival Cruise up 5%, though well off of its highs. Anything energy related higher on the day. You got Intuit in the news there. That's earnings driven there, which by the way, they need better lobbyists. Intuit, we'll cover this in a minute, but they need better lobbyists there. They really should have been the ones to go to the government and say, don't give the IRS $80 billion. Give us like $2 billion a year and we'll develop software that does all this for you. So you don't need all the guns and ammunitions and intimidation and things. Come on, they already have everything there. Side topic. Anyways, so as you're looking around, that's going to be what you're going to find. Looking through industrials, utilities, basic materials, some of the banks, it wasn't a full blast-off rally for every single sector, but you had a lot of good stocks in there that were helping you out and get things going, at least a little bit today. The NASDAQ also up a little bit today. It erased everything from yesterday. It had a smaller day than the S&P yesterday. It has, was it smaller today? Basically on par with the S&P today. The Dow had a smaller day overall. It did not erase all of yesterday's losses. I don't know why. I didn't look at it there. But the Russell 2000, that's not bad. Now, your small cap stocks, what do you think's happening there? Why do you think small caps are more likely to rally ahead of Fed news? I'll just tell you, right? So the Fed decisions don't affect the small cap stocks as much. They certainly do. I'm not discounting that, but they don't affect them as much because they're not in borrowing tons of money growth mode. They're not very sensitive to interest rate changes. They're not sensitive to interest rate changes overseas so much. You know, it just, they're kind of here. The smaller companies doing their thing. They're sensitive to economic news. You ever notice that? Russell 2000 gets a little bit more volatile when there's some really strong economic news. It doesn't really look at the rest of the stuff, right? So that's good news for the small caps there. They have been attempting to rally. Everything's at least looking a little bit better there. I'll talk about crude oil. There it is. Basically up 2% on the day. It continues to run higher. The news driving that is our inventory numbers from today, as well as OPEC saying, hey, we're willing to cut production. You ever notice that? OPEC is the Fed of the oil space. That's the easy way to think about it. Their language, they call it jawboning, their language can drive prices one way or the other. They don't have to cut production, but their comments about cutting production will certainly cause oil to what looks to be a bottom out in this case here. So you've got crude up to basically just $95 a barrel here. Natural gas, by the way, remember, energy is not driven by only crude oil. It's driven by natural gas as well and others. That's going to be multi-year highs for them as of yesterday. So the energy sector as a whole gets lifted on this. It enjoys the bounce based on both of those. That's why you have a little bit of extra support there in the energy sector. Since the low here, July 14th, somewhere in there, energy is giving you about a 20% rally. It is now less than 11% from hitting the 52-week high, which we set back here on my birthday, right? Yeah, on my birthday. So if you look back just these 3 weeks here, I'm going to go right there. Look back these 3 weeks, and if let's say you just start 3 weeks ago, not a single stock in the energy sector was above the blue line. It's 50-day moving average, right? As of yesterday, because that's when I looked at it last night, all but one name was above the 50-day. And you know who it is? Baker Hughes, BKR. That's the only one that hasn't made it yet. Every other stock has rallied back so aggressively that it's over its 50-day moving average, an indicator of sort of short to midterm trends if you're interested in learning more about that. But it's right there, right? Baker Hughes is about to be now the last stock to get above the 50-day. So that's crude oil. Went on a little tangent there, but if you're looking at energy, I believe that was your best performer here today and has been the best performer overall. Year to date, it's up, I've got to be almost 90%, right? Yeah, it's almost 90% there. All right, what else do we got here? Mortgage rates, man, all over the place. You shopping for a home? We went from 6% at the end of June to 5.25% national averages there, which was just earlier this month. And no bounce in mortgage applications or purchases, right? Whoa, right? The 0.75% drop in mortgage rates, national mortgage rates, did nothing for mortgage applications. Things are slowing down there, actually. We made a new low again this week, which really is the first time we've seen that since COVID, and then going back 2016, it was about November of 2016 there, since we've had lower readings in the mortgage applications economic numbers. I like to glance at them. I don't spend a lot of time on them, but those did come out. We are back to 5.87%. Roughly on the national average for mortgages right now. So it just tells you that mortgage applications aren't likely to see a whole lot of support in the next coming months, and et cetera. With that in mind, go to XHB. These are the home builders. It's one way to look at home builders and home builders suppliers, you know, Home Depot, things like that. New home sales yesterday absolutely fell apart. Inventories are now up 20% year to date. And also existing home prices, they fell, where'd it go? 0.77% last month. This is Black Knight's data. This is not mine. 0.77% last month. Largest drop in a 1 month period. That's the largest drop in over 10 years. Why is that? we went climactic, right? We went parabolic, insert term here, whatever you'd like to have there. Existing home prices, used homes is another way to say it, they rocket shipped higher, right? Especially in Florida. I can't believe the 20+% gains over gains in our home prices there. That's parabolic. I always tell you guys, anything that you can buy, when prices get parabolic, they fall fast, right? It could be a stock. It could be a car. Look at wholesale car prices down 10% since the last month there. That's the biggest drop they've seen in a while. So parabolic. Car prices went parabolic. They come back. Anything you want to buy does the exact same thing. You've seen gas prices go parabolic. In other words, the rate of change in gain day over day increases. Keeps going. Parabolic. What happened to gas prices? We fall back real quick there. So a little side topic there, but just something to keep in mind. Anyways, if you're looking at the home builders here, you do have your pullback there, but you really have to wonder, is the news going to get any better? Home prices falling, mortgage applications falling, inventories for new home builders going on 18 months for the homes that they haven't completed yet, by the way. So new home inventory numbers can be misleading because they break them down by homes that are sitting and ready to be bought and the homes that are under construction. The real backlog right now is homes under construction, so they have to finish the homes first, which makes sense. Okay, what do we have? Hey, new highs. I don't have a whole lot here for this one. Let me just show you a couple. Hershey's breaking a new highs. That has been relatively strong during almost every single week period so far this year. Just compare it. Right? Look at the stock market. Year to date, I go like this. We'll go over to the S&P. Year to date, right? Fits and starts, but mostly down throughout the year. Hershey, they loving it, man. Back to new highs, so I wanted to point that one out for you. Sticking with the same space there, you got General Mills hitting new highs, consumer staple stock people like to look at. And going over to transports real quick, C.H. Robinson. It did break out to new highs today, actually. So another one that's way relatively strong compared to the stock market there. We do stocks in the news here for you today. Oh, BBBY, man. It just a glimmer of hope for all those meme traders out there. This thing's up 18% on the day. They did, they gave it a shot. They put out some news to the Wall Street Journal. Wall Street Journal says, we have an exclusive. The company, Bed Bath & Beyond, has has secured new financing, $375 million to what? Pay their suppliers so they'll continue to deliver their goods there so they can keep operating. And that gives you an 18% bounce on Bed Bath & Beyond. But there's so much more to go there. I feel no pain for those of you that have played along with that. Hey, Wendy's, that news from the other day that they were going to be out in the Midwest, they were going to be getting rid of lettuce because of E. coli breakout. If you look at New York Post, I think it was, they now have on record over 100 people that have become sick from that contaminated lettuce. Didn't really affect the stock today. This is your news right here of the contaminated lettuce, them taking it offline. Now we're starting to find out who's getting sick. Intel. I'm sorry. No, I should have typed Intuit. Yeah. That move today is earnings related, 3.5% gain, better than expected earnings, better than expected total sales. They did lower guidance going forward. They are questioning some of the changes coming up for next tax season there. But again, like I said, who do you think would do it better? Here's $80 billion to the IRS. Go ahead and, fine tune everything. Or giving a private company like Intuit some money to develop software. And maybe they work with H&R Block. Like, nobody's having these conversations. We just throw some money out there. Kind of like the student loan thing. Just, there you go. It's $10,000, $20,000. It depends on who you are. Boy, that's a little frustrating, don't you think? Get you guys started on politics today? Brinker International. When you think Brinker International, think Maggiano's, right? If you've ever been to Maggiano's, they own a lot of brands, but I always think of Maggiano's. They reported earnings there. They are not optimistic going forward. Margins are the issue there for them. Food prices, expensive. People maybe not going out as much. Actually, they didn't say that, but maybe that's coming. Nordstrom also in there. You've been shopping at Nordstrom? Apparently so. They were pretty. The quarter wasn't bad, last quarter, but quarters going forward, their projections are, $110 t-shirts maybe not selling so good right now. And so the stock down 20%. I believe they also had some comments on their going private efforts, which have not gone well for them. But that I believe that was them. I get mixed up by quarter. I know they did that last quarter, but I think that's in there for you. Anyways, going into tomorrow, what do we have? Abercrombie and Fitch. All right, they're going to report earnings. A lot of retailers. Remember, earnings season is over unless you're a retailer. Abercrombie and Fitch, Burlington Coat Factories. Do they still call it that, or is it just Burlington now? Kind of a retailer, Coty, C-O-T-Y. They make the makeup for the retailers to sell. Sort of takes the glamour out of thinking you have special makeup or some special lotion or potion or whatever. Dollar General, Dollar Tree will report. Hanes Celestial Brands, Malibu Boats. How about that? Peloton after hours, and then you have, no, Peloton will be in the morning. And then you have Affirm after hours, Dell, and The Gap. The Gap will report tomorrow. So a big day for mid-level retailers there. Yeah. And I believe there was a Fed member speaking today, the Neil Kashkari. I believe he spoke as well. And he's been the most vocal lately there. He said, hey, there's no reason that the Fed's going to back off on what they're doing. So that goes back to what we were talking about earlier in the show here, that as long as the comments remain consistent, we're okay with the current level of aggressiveness. If they sound more aggressive or unhappy about the pace of declining inflation, that will put a damper on any attempt higher. Yeah. All right, I'll take your questions there if you have any. Otherwise, we'll wrap it up. The rain is starting. It is coming down now. Other than that, you know what to expect for tomorrow, and we'll see what happens there. Roth is the way to go. Yeah, I don't blame you, right? Especially the young ones out there. It's so simple to, I know it sounds like marketing, but go open a Roth anywhere. If it's with us, that's fine. But if it's somewhere else, that's cool. Man, the young guys, you see the games being played. Who's going to pay for student loan forgiveness? Who is paying for the IRS to double in size, right? Boy, it's going to hurt, man. A Roth, at least for now, gets you out of that mess. So if you have kids or something, you're trying to push them, man, get them going. We all wish we would have started earlier, right? I've never met anybody and now I have some clients that are real young that I think they might be the first people ever in history. We got a 23-year-old and a 19-year-old that are really gung-ho. They could be the first people ever to say, I started early and I'm glad I did. We'll see what happens. Yeah. Oh, you see the power flickering in the background? You do. We still here, man. Look at us go. Look at us go, man. Still there. Well, clearly the power is flickering. We are about to be in trouble. So if I lose you, have a great rest of your night there. But, oh, Eric did join you last night. He didn't tell me how it went, man. And fine. Yeah, I'll never join you again. That's coming in with them words, man. You cut me deep, Tim. You always get me. If we are already in a bottom, could be to get in options long term, 24 calls, things like that. I would think that it may not be much. Whoa, a lot of thunder. It may not be much, but you may want to wait closer to midterms just to get a little bit more juice out of the options if you're selling. If you're buying, then you want to get ahead of that, of course. Yeah. Yep. 3M going through a bit of a change there. Yep. I got a ton of questions on that one from clients. That is the case. Yeah. There you go. All right. I better sneak out while things are going well here and you're able to still see me. Enjoy the rest of your day. I will be back tomorrow. We'll do this all over again. Good. My truck's getting a little wash outside. I like it. Enjoy your day. Thanks for watching, and subscribe if you can. You know what I mean? You press the button. You do it for me, right?